Hi, I'm Darius McDermott, Managing Director of Chelsea Financial Services. Today I'm with Simon Brazier, Fund Manager of the Investec UK Alpha Fund. Simon, good morning.
Morning.
It's a slightly repeated question, but as a UK equity fund manager I have to ask you the Brexit question. But with the context of your long-term investment horizon, because you know, fund managers like to invest for the long term, not just for next March, how's Brexit affecting you at the moment?
Look, I don't know what the outcome will be, and I'm not going to try and predict it, but there are two main factors. I mean, the first is economically. There is absolutely no doubt that the uncertainty around Brexit has affected economic growth. I mean, just take business investment as an example. I meet so many companies who are withholding those decisions until they get greater certainty what the trading relationship will be with Europe and the rest of the world. And business investment growth is a big part of GDP. So that's certainly holding back UK GDP growth. The second area is the currency. You know, we saw sterling weaken significantly after the Brexit vote, and depending on the outcome, we could see sterling fall further. And that would impact many of those companies that rely on buying maybe their inputs from abroad in order to sell on. And so those companies would find it more difficult because they would have to sell on either at higher prices or they would have lower profits. So both currency and the economic outlook are uncertain and make it difficult.
And what about the UK consumer? It's a big part of the country's sort of budget, GDP. How's the consumer looking in consumer stocks at the moment?
I mean, that's a very good question because it is, as you say, it's about 2/3 of GDP. And look, the consumer has been relatively robust, quite surprisingly. They're still growing spending. But there is only two ways you continue to grow spending, which is either you have real wage growth, we all get paid more next year compared to now, we can spend more, or we save less. And the reality is that I don't see real wage growth coming through. I don't think employees can demand above inflation pay increases from their employers with all the uncertainty going on. That means we have growth because people save less. My concern there is that we're already only saving about 2 or 3% of every £100 that we get.
Yeah.
And so there isn't much room for manoeuvre there. And if we were to have a shock to the system and consumers stop spending for a period, that would hit the growth economically. So again, the consumer is important, but there are certainly risks to the downside.
Yeah. So pretty choppy outlook for the UK market in return in its respective global markets anyway.
Yeah.
But where are you finding opportunities? Are there any opportunities in the UK stock market today?
Well, the good thing is first of all, the UK stock market is not just the UK economy. Nearly 3/4 of revenues of companies come from abroad. And so we are still able to find companies that have good growth outside the UK. Secondly, we're able to find companies that are just generating strong cash growth because they may be relatively defensive. So some of the consumer staples companies, those companies that sell food, sell deodorant, sell washing products, those are the companies that are continuing to still grow to a degree, and they can reinvest that cash flow. They may do acquisitions, for example. And finally, it is the companies that have self-help. There are many companies out there that have maybe fallen on hard times, but with a new management team may be able to recover. And it doesn't matter what happens in the external environment, you see that recovery coming through. So we are looking for other ways rather than just relying on the UK economy.
Simon, thank you very much.
Thank you, Darius.
For more information on the Investec UK Alpha Fund, please visit chelseafs.co.uk.